Good morning, traders. Welcome to today's market review. This is Fred Razak at CMTrading. Today is February 11, 2019, and today is Monday morning. So looking at the major economic events of the day, just one event coming out of United Kingdom. That's a monthly GDP number coming out. Now, I don't think this is going to shake and rattle the markets, but you do want to know if there are any surprises that this number is coming out. It will be at 11:30 South African time. Now, looking at the markets, dollar getting stronger across the board. Euro is flirting at the bottom of the range, where it's been trading between this 1320-ish level and 1480-ish level. We'll take a look at that in just a moment. Dow Jones sells off to support, and DAX falls sharply last week. We'll take a look at that. That's really a major play last week. Looking at commodities, gold is on lower volume and just tapers off to 1312 from its high of 1330-ish. And then oil retraces below $54 a barrel. Now, lastly, looking at stocks, Facebook had a big gap down last week, but it looks like it wants to fill the gap. The markets are still strong, despite the sentiment, the markets are still, seeping the effects of Russian and United States having some issues politically, United States having issues economically with China. It kind of got brushed off. Okay, last week we had the major events of the year, so to speak, in the corporate side. Facebook, Amazon, Apple all reported stunning, stellar reports and guided higher as we're going into the next quarter. So I do expect the markets to be resilient there. But let's take a look at markets and see what we can expect from today's trading. So we're looking here at a 4-hour chart of the Euro USD, as you can see down here. And basically you could see that, if you take a view back, okay, if you step back and take a view of the charts, you basically see pretty much a zigzag area between these two levels. Okay, I'm going to just draw it just randomly right there. And the upper range is 1480-ish level. The lower range is 1320-ish level. And just to clear this up a little bit, okay, just to see where we're at, okay, we're right here at 1320-ish level. And it does look like we may make a little bit of a correction on the upside. Now, I don't want to get into this too aggressively at this area. What I would do is, ease into the position, wait until, start buying small, see that it works, and then get a little bit more aggressive, have that, so to speak, that buffer, and then take it up on the high side. Okay, so this is definitely a trade of the week potentially if this does, continue trading upwards above this 14.0-ish level. Okay, however, just that you may understand that previously we did hit a low of 1294-ish level, so there's still room for this to, retrace on the downside. So that's why I'm saying to just build the position slowly in anticipation it's going to correct itself. GBP, same story, 129-ish area. We're looking at a daily chart. Let's look at a 4-hour chart. Retraced from its nice rally upwards about 40 to 50%, but it's at that stage where it may want to take another shot on this 132-ish level on the high side. Now, jumping to the Aussie dollar, we've been trading in a range here as well. Looking at that daily, we're pretty much at that bottom of the range here as well. So everything is trading in tandem versus the dollar. Everything is at the bottom of the range. So we're looking for some corrections on the upside. Now, looking at gold, we pretty much flatlined here. We're trading right now at 1310. 1312-ish level. We retrace from our high of 1325, 1330-ish level, but right now we just pretty much on low volume, just trading sideways for some impetus, for some sort of direction from the market to tell us to go higher or lower. Now, looking at oil, we've made that retracement down to $52 a barrel. Now, that carried the Dow Jones further down and is still trading together between the Dow Jones and oil. We're jumping to the Dow Jones right there, trading at 25,044-ish level. We may see still a retracement down to the 24,751-ish level. That's our next support level. So just be aware that that may still be challenged as the market, cleans itself out and maybe takes another shot on the upside. Before it does that, it may go further down to this 24,751-ish level. Now, looking at Facebook, this is what I was talking about. We gapped down last week, and we looked like we were going to fill the gap. Now, this is Friday's position that we gapped up, okay, and then we gapped down on that previous day, okay, on that subsequent day, and we look like we want to fill that gap on the upside, okay. 169 level, 171 is where we're having a little bit of resistance breaking above. Now, the markets are going to wait for some sort of impetus to take us higher. And until that happens, we have to see how further this can further go up before it does that. So, ultimately, At this stage, I wouldn't jump into it so aggressively. It is breaking the 30-day moving average. However, if it doesn't close this gap, okay, on this area right here, then we may see ourselves, closing another gap or retracing further to the 160-ish level. I don't think we'll get back to this 149-ish level just yet. I think we're going to have to wait until that actually happens. Now, lastly, looking at that DAX, this is the nosedive. Now, this didn't follow the Dow Jones. This is something by itself that sold further down. Europe's having its own issues, obviously. As a result, the DAX faltered from 11,381 down to 10,000 points. Okay, that's a major nosedive right there. Looking at that bottom of that range, now it looks like it wants to bounce off of this range. And the question is that will that actually create later today? Looking at that weekly, this is really faltering at this 11,263-ish level, and the DAX may carry the rest of the markets further down, but it might be isolated still. So, a little bit of misdirection here with the markets not trading in tandem completely as the DAX takes this correction. This is Fred Razak. I want to wish you guys a great trading day. Thank you.